All right, guys, it's Angelo Christian. Today we're going to be interviewing Angelina Hossein Ali, our senior processing manager, talking about it's a very important subject, how to document cash to close. And this is for our mortgage university, and it's basically an educational piece to teach people that are either new in the business or even if I've seen even people that have been in the business for a long time that really mess this part up. And basically, when you're buying a home and you have to bring money to closing, there's a certain way that has to be documented. And a lot of people that are from the consumer side of the situation, they just think, well, I have this money in my sock, and I'm gonna bring this to the closing, or I'm gonna borrow from my brother. Or I'm going to sell a car, and that's acceptable. That's okay. I don't have to go into a great detail to show you where this money came from. And unfortunately, that's not the case. It doesn't work like that when you buy a house. When you buy a car, no one cares, right? I mean, if you got it from, hey, I borrowed the money from my friend to buy a car, nobody cares. But when you're buying a house, because it's secured with real estate, and there's a bunch of legal stuff, they want to see where did that money come from, and where it comes from does matter. And Angelina is going to explain, first off, where she sees problems in the loan process from the origination standpoint. And that's actually one of the first things I want to ask you is, so where's the biggest issue that you see this breakdown where documenting the funds to close, where does let me think about that as far as the question, because you're work with loan officers and
Right.
they turn loans into you, and you
Yes.
say that one of the biggest chief complaints that you have is that you don't know where the funds for closing are coming from.
Right.
Okay, so what are you seeing most of the time?
Well, I think that a common issue in processing when it comes to documenting the funds to close is large, cash deposits being made. I think that that's something that we definitely see a lot whereas, from an unsourceable, it's coming from an unsourceable location.
Okay.
So you aren't able to use those funds because there's not a paper trail to where they came from. So, for example, if a borrower receives, direct deposit payroll and it's going to their bank account, of course, that's acceptable. And there are some deposits that are acceptable, like you mentioned, if someone sells a car, and providing the documentation to source where the funds came from for that. So, for example, if you bought a car from me, and and it was like $5,000, let's say. So how you would document that would be, one, you would have to provide the bill of sale, and then the online printout from like a KBB website, Kelley Blue Book, showing what the value was of the vehicle, let's say for the $5,000, and then the title of the car. And then, of course, you would always want to get the payment in the form of check, because, again, trying to go and, source cash deposits is very difficult and complicate the process. Mm-hmm. And you may have to back out those funds due to the inability to source it. So that's why I was saying that, you're basically wanting to provide this paper trail to show each step that happened of how those funds became available in your bank account. Because, let's say your bank account started with a beginning balance of, $500, and all of a sudden, there's a large deposit of, $5,000 going in. Well, now you have, a large increase. So we have to, that raises questions. So in order to evidence this to the underwriter, you have to supply these documents to show this, so show the trail. So it's a paper trail, basically, of like I said, each step that took place to make these funds available in your account, to be able to use them for the home loan process.
Right. So basically, I just want to recap there. So you're saying that if it's a large unsourced deposit, that meaning that they can't show where that money came from, even though it's in their account, then it will not be allowed to be used for the closing costs or down payment.
Well, yes and no. So if it's yes, that's correct. If it's undocumentable, then yes, it will not be able to be used. I mean, if it's a one-time like large deposit, $10,000. I mean, it could have been a liquidation from from something. It could have been a gift, and we'll go into that further here. But yes, by the rule of thumb, it raises questions, and that's when the processor says, okay, now I need you to source this deposit. I need goes to the borrower and says, okay, provide me this paper trail, this and this, and then a letter explaining this. And then we have to be able to determine from that point, hey, can we actually use these funds or not?
Okay.
So
now let me ask this: what about if somebody had sitting in their bank account? They had, let's say, they had $100,000 sitting in their bank account. Then would you have to? Then it's been sitting there for a couple months. That was their average balance. Then would that matter?
No, that's perfectly fine because it's been sitting there. It's been seasoned in the account, and on most bank statements show you at the bottom of them what their their average balance is in the account, their beginning and then their ending balance average. And then processors also order a verification of deposit from banks. And so when this form comes in from the bank completed, it shows us the current balance, the average balance for the last 2 months, and the year of the account, the date the account was opened. And so we then, will, use that and then, to verify that, those funds and that the account balances didn't change much. So if someone had $100,000 in their account and I ordered a bank verification form to be completed and it came back with $102,000 as their average over the last 2 months, well, that would be perfectly acceptable because their current balance is 100 and their average over the last 2 months was 102. So there wasn't like a huge increase.
So the key takeaway here is that if somebody, let's say a new person is looking through a bank statement and they're doing FHA 3.5% down, if there is a large deposit in there that's unusual, that will have to be sourced in order to use those funds. Now, if it cannot be sourced, then it cannot be used.
Yes, that's correct. So you will not be able to use it, and the processor would have to back it out of what is your available balance, and then we'll have to take that as a negative.
Okay. Now on the sourcing part, there are acceptable and unacceptable sources.
Yes.
Okay. What are the unacceptable sources?
So as we talked about a little bit earlier, was the large cash deposits from an unknown source. So like if you had mattress money, or like you said, money from your sock, or some people say they had in their backyard they have a hole and they have a safe in there and then they just put money away little by little. Well, those things are unacceptable sources because it's not being seasoned in the bank and it's going to be deposited into the bank account from an unknown area. So we have no way to track where this money came from. So that's pretty much your unacceptable source.
What about a loan?
Well, if you did get a loan for the down payment, I definitely would say no to that because one is you're taking out a hit on your credit because now you've just taken out a new loan. You've added to your DTI, your debt to income ratio, and added a liability with a payment. Therefore, it could prevent you from qualifying. So a loan is an unacceptable source. From like a payday type company, yes, those are unacceptable. You definitely don't want to do that.
Okay.
Let's see here. Loans from families, friends, those aren't acceptable. That's why what is acceptable, and we'll get to that shortly, is when we refer to that as, is a borrower getting a gift. Because a gift does not need to be repaid. A loan has to be repaid. Therefore, it's unacceptable.
Okay.
So when I'm gifting something to you, I'm not asking for anything in return.
Okay. Now on the gift though, does it matter who the donor is?
Well,
let's say if you're not related to the borrower, it's a friend or a coworker. Is that acceptable as a gift?
As far as it being a coworker, I've never had experience with that. I would say no to that. FHA guidelines state that it does need to be a family member,
Okay.
or it can be a close friend
Okay.
or a close relative. But if you are getting it from a friend, a close friend, you would need to document with a letter of explanation how long you've known this person. They would need to sign the letter and along with you as the borrower and your relationship as far as, having a very close relationship. Like this person she was my bridesmaid in my wedding. This is how close she is to me and to my family. So that's acceptable. Yes.
Okay. So the other thing is that let's say that it is a gift, and what if let's say that it is. Let's say it's your mom,
Mhm.
and they want to give the son the money. Now, does the donor have to show stuff of like where the money came from?
Yes. So it is okay to do that. And preferably, there's two different ways that a gift can be done. So the simplest way is that the gift donor can wire the funds to closing to the title company directly at the time of closing. Therefore, that eliminates the process of needing the canceled gift check images that would have to be provided once the donor gives them to the borrower and the borrower deposits them in their bank account and then it clears the account. So if you're going to do a gift from a family member like a mother, you would need the most recent gift donor's bank statements. So a 30-day bank statement to show the funds were available in the account and that they cleared the account is typically what you need. So if the way you're going to do it, if you're going to need, if you do it by the form of a check, is that it cleared the account. Now, if the gift donor is going to wire it to the title company, which is a less headache way of providing, more paperwork, they can just provide their 30-day bank statement showing that they had the funds in their account and the ability to gift.
So they still have to show the bank statement?
Yes, the gift donor will, and you will also need the gift letter. And that needs to be...
and we're going to include that as an attachment, guys.
Right.
There's going to be a gift letter attached to this. You'll see what that letter looks like, everybody.
And that one needs to be completed by the borrower or borrowers and then the gift donor. And that's just basically giving the underwriter the information about, the gift and the amount and what bank account it's coming from and who it's going to and the amount and et cetera. So.
Okay. Now... one thing I was thinking about, what about, can the donor, does it matter where they got the money from?
I haven't run into an issue with that before. Sometimes there's, let's say that if the gift donor was to get, had a large deposit go in the day that they gave the gift out. So then I have run into before where the underwriter has needed verification of the deposit check and deposit slip going into the donor's account to show that it was not from a large cash amount from the borrower going to the gift donor to give them the money. So that has been that's why they ask for the deposit slip, or they'll ask for the check image if they see a large dollar amount.
No funny business, huh?
Yeah, that's right.
Okay.
No funny business with the gifts.
Okay. So, okay, now what about if somebody wants to pull the money from like a 401k or retirement account? How does that work?
Yeah, that's perfectly fine, and we do that, all the time. So if you want to pull from a retirement, you would typically, you would provide your most recent quarterly retirement statement to show how much you have, vested available in the account. You would contact your retirement provider, and they would, you would, supply a withdrawal request. Let's say you took out $4,000, and then they would either wire the funds to your bank account, or they provide you with a check. And then the borrower would need to provide either the canceled check images for the for the 401k check, or they would provide the wire confirmation if they had it wired to their bank account. And then at that point, once the funds go into the borrower's bank account, we would need the updated bank statement to show the funds being deposited and that they're available in the account. And when somebody does have a retirement, there is a booklet that is needed to from the retirement provider. It's the terms and conditions. It goes over how it works if if someone does withdraw from their account, the terms, the penalties, if there's any, fees associated with it. So that is also needed too when it comes to, that liquidation.
That? Oh, okay.
Yes.
Now, does the retirement company also want like a copy of the pre-approval letter or loan estimate?
Sometimes they do. I've seen, out of doing this for so many years, I've seen a handful of retirement companies want that. And typically they'll either want the sales contract, the loan application, also known as the 1003, the pre-approval. But like I said, I've seen that about 5 times in doing this for about 13 years. So.
Okay.
But sometimes they do. If they're doing like a hardship, withdrawal for the hardship or an early withdrawal,
Okay.
then yeah.
Okay, so I guess those are the main takeaways. That I mean, so these are the primary sources, I guess, for documenting cash at close is either a gift, withdrawal from a 401k.
Yep.
If it's a large deposit and it's unusual for the account, it does have to be sourced.
Right.
If it's not sourced or it cannot be sourced, then we cannot use it. You cannot take out a loan to cover your down payment because it'll affect your debt ratio. Now, if you have funds seasoned in your account, I want to make it clear if they're sitting in your account for, I guess, 1 month or 2 months?
1-2 months, then that's perfectly
so
fine.
So that means if the funds, when we say seasoned, what we're saying, they've been sitting in there and it shows like an average balance of a certain amount, and they've been sitting in there, then potentially those don't have to be sourced. But if it's a quick deposit, and like she said, if the average balance is $500, and now you have a $5,000 deposit, a week before closing, they're going to want to know where did that money come from. And the acceptable sources are like payroll, IRS refunds, a gift, but not, borrowing the money from your buddy Tom, or selling a motorcycle or something like that, or a fishing pole. You have to be able to show where those funds came from. And if you do sell something, it has to be documented and thoroughly documented, like a car, for example. So those are the main takeaways. But this is a very, very important thing, because if you overstep this, then your loan will not be able to close, and then you just wasted everyone's time, especially the borrower. So anyway, I appreciate you coming out today
thank you very much.
talk about. Is there anything else that you needed to add to it, or?
No, I think we covered it all. Thank you, guys.
Those are the main things. Thank you guys so much. And there are going to be attachments to this showing the 401k withdrawal and
gift letter, and different retirement
forms that are going to be needed that you're going to have to use for your client. All right. Thank you, guys.
Thank you.